How do you buy a home with little to no money down? We're getting after that right now. Hey everyone, if you're looking to buy a home with very little to absolutely no money down at all, then we are covering that right now, all the different loan options to look at and how to actually pull it off. And before we get after that, my name is Curtis Chisholm with the Chisholm team, and my team and I absolutely love helping people buy homes, especially first-time home buyers. If that's the case for you, just gotta reach out to us and let's have a phone call, let's have a Zoom call, let's meet if you're here in town, but if you're out of town, we'll have a Zoom call and figure out exactly what it is you're looking to accomplish in buying a home, and we'll put a precise plan together to make this process, buying a home, absolutely as smooth as possible. My team and I absolutely love helping people just like you, but you just gotta reach out so we can have that conversation. All right, let's get after how do you buy a home with no money or very little money down? Now, first off, there are multiple loan programs available. Most of these are first-time home buyer programs, but one is not. So let's dive into what those are. First up is going to be the FHA loan program. This is a 3.5% down payment. I'm starting with that before we get into the zero down payment programs. First-time home buyer program is the FHA loan program. So this is the Federal Housing Administration program for first-time home buyers. 3.5% down payment, and you can buy a home. So if you're buying a $500,000 home, for just over $17,000, you can purchase a home. And now there are some other costs involved that we will dive into, but for a first-time home buyer, boom, that's how you buy a home for very little down. Now, do you have to be a true first-time home buyer to buy this home using this program? No, you do not. You simply cannot have owned a home for the last 2 years. I myself have used the FHA program twice. I owned a home a long time ago. I sold it to put the money into another business that I had, and ultimately I bought another home, again, using the first-time home buyer loan program because it had been over 2 years since I had bought that home. So there are some drawbacks to this. There is a funding fee with the FHA that gets tacked on. So that's gonna be very little bit, but basically around 1.75%. That gets added to the cost of the home that you're buying. So it increases your mortgage payment by just a little bit extra. There also is property mortgage insurance. So this is any loan that's made that's under 20% is going to have mortgage insurance on it. And that raises the cost of your monthly payments just a little bit per month. Now, depending on the loan, if it's around $500,000, it could be several $100s per month. It's gonna depend on how good your credit is. So that's gonna vary. So we just have to factor all that into your payment plan when looking to buy a home. So FHA loan program is the first one up. Next, we're gonna look at the VA loan. So VA loan, if you are a military veteran or even currently serving and you have the credits for it, then boom, you can get a VA home loan. And this is an absolutely fantastic program. Zero down, zero money out of pocket for your down payment. And there is no mortgage insurance. So you save the several $100s that you would pay with the FHA loan, and you don't have to pay that. Now, there is a funding fee involved with this too that varies depending on certain circumstances. So that also gets added to the cost of the overall mortgage. So that it does increase your mortgage payment just slightly. However, if you have any disability of 10% or more, then you can get that funding fee waived entirely. If you are eligible for a disability of 10% or more, I would recommend you go after it so you save that funding fee and save yourself a little bit of money. Now, the other thing too is that if you have 100% disability, you can also get a waiver on property taxes as well. That's gonna waive quite a bit of your property taxes to save you even more money on your property taxes as well. So fantastic loan program. You can also use the VA loan multiple times. You can refinance out into a conventional mortgage and use that VA loan again. There's also, you can actually have two VA loans at the same time because you're subject to a certain amount, and you can, if your homes are less expensive, you can have two VA loans at the same time. So, and there also is no loan limit on the VA loan. So it's just based on how much you qualify for and what the lender decides. Next up for a zero down program is going to be the USDA loan. So this is a loan program designed for first-time homebuyers for rural areas. This doesn't mean buying a farm. This means recently developed property in a rural area. So the federal government is trying to encourage people to move into these more rural areas, and they've done so through the USDA program, which is a zero down program as well. Now, there are a little bit stricter requirements as far as credit, and if you have been bankrupt recently, basically you cannot have a bankruptcy within the last 3 years. FHA just the last 2 years. But it's a great program for a zero down program. So if you're looking to move into a more rural area, then you can qualify for this. We can look this up for you to see if the home or area that you're looking to buy in qualifies for this. So just reach out and we'll figure out if that makes sense for you. They're also, going back to the FHA program, there are some loan programs you can add on top of the FHA program that basically lowers it down to 0%. So these are extra bridge loans that get added on to get you down to 0% with FHA loan. So if that's something you're looking for, the lenders we work with also have access to those as well. Of course, it's going to increase your mortgage just a little bit. The final one is the conventional loan. So this is, you do not have to be a first-time home buyer to use a conventional loan. Most people look at conventional loans as 20% down. That's what they think. This is going to carry a little bit stricter requirement, credit requirement and income requirements as well, but you don't have to be a first-time home buyer in order to utilize this loan. And you can go as low as 3% down payment. So you can go 10%, 5%, or 3% typically for a conventional loan. Now it is going to carry mortgage insurance with it, so it's going to cost a little bit more, but you don't have to be a first-time home buyer to use this, and your interest rate might be a little bit better as well because the the credit requirements are a little bit more stringent. So that can be a good way to go as well if you're not a first-time home buyer, but you're looking to use a conventional loan program, and it's not going to carry that funding fee with it either. So you get a little cost savings there as well. Now, there actually is one more bonus that I'll throw in. That's a jumbo loan. If you're looking to purchase a home that's outside of the funding limits for FHA and for conventional loan, you can get a jumbo loan. This is going to put you into the 10% range, and there are loan products out there that don't carry mortgage insurance. So, but these are generally going to be homes that are like $1 million or more. If that's something you are interested in, I can hook you up with a lender that offers a 10% down payment with no mortgage insurance. But those are the different types of loan programs out there that are going to get you into a home for 0 down or very little down. Now, here's the final trick as far as closing costs and getting into a home for very, very cheap. You're going to have closing costs on top of your down payment, and what's going to happen here is that's covering things like property taxes, mortgage insurance, prepaid mortgage insurance, escrow fees, etc. That can be up to 2% of the purchase price of the home. So if your home is $500,000, you could be paying $10,000 in closing costs. Now, with the economy the way it is and the housing market the way it is right now, and this can change over time, you can typically get the seller to pay your closing costs for you. So you don't have to come out of pocket. So normally you would have to come out with your down payment money, whatever that might be, 0 or 3.5% down, and then your closing costs on top of it. Now, that being said, because you can get your closing costs covered by the seller, now all of a sudden you're not having to come up with that extra money. So on a 3.5% down home loan, you might have been at $17,500 plus another $10,000 on top of that, and you're at $27,000 roughly to close on the home. But you can get your closing costs covered and only come up with that 17 or even the 0 down if you're in the VA or USDA program. So those are all the different ways to buy a home with very little to no money down. And if that's something you're looking to do, please reach out to me and my team. We'd love to talk with you to help come up with a plan to help you purchase a home to make this just absolutely as smooth as possible. You just got to reach out via phone, text, or email, and we'll see you on the next video.